Hey there, I'm Apple Kreider with Investing Simple. In this video, we're diving deep into the best investing apps out there for beginners in the year 2021. Now, with the massive improvements in technology that we've seen over the last decade or so, there have been a ton of apps coming out with a lot more features that are a lot less expensive than the brokerages of the past. So in this video, I'll be outlining the 9 best options out there for you if you're looking to get invested in the stock market, or if you're just not sure if the app that you're using is the best one out there for you. Now, the first thing that I want to talk about is the free stock offers that a lot of these apps actually provide to you as a new user. So one of the main ways that these apps tend to market themselves is by giving away free stocks to their users, and what better way to attract people to your platform than with free money. Now, of the 9 apps that I'm going to dive into, most of them actually do provide some kind of free incentive to sign up. So I'm going to dive through those right now just so you can see which one's going to actually pay you the most money to sign up for their platform, if that's going to be an influencing factor in your decision. So going from most profitable to least profitable, first we've got Webull, and Webull is going to give you 2 free stocks worth up to $1,850 when you do deposit $100 into your Webull account. So that's a pretty nice sign up offer. Next, we've got Robinhood that's going to give you 1 free stock up to about $225 when you do create an account. Third in the place, we've got First Trade, which is going to give you 2 free stocks worth up to $400 when you do sign up for an account and fund with $100. That's kind of a recurring theme among these sign up bonuses. They don't just want you to sign up, but they also want you to put at least a little bit of money into your account to hopefully up the odds that you're actually going to use the thing. Next, you got Moomoo, which is actually going to give you 4 free stocks, but you are going to have to fund your account with a little bit more, which we'll talk about later. The last 2 are going to be M1 Finance and Public, which are going to give you $30 and $10 respectively when you do sign up for your account. With M1 Finance, you are going to have to fund with $1,000, which is a bit of a steeper threshold, but with Public, the threshold is not quite so high. And we'll have links down in the description below for all of those apps to take advantage of those free offers if you do want to get rewarded for signing up for some of these apps and trying them out. But now that that's out of the way, let's dive into the feature sets of these different platforms, what sets them apart, and which ones are actually best. Well, coming in at the number 1 spot is an app called M1 Finance. This is going to be the best app for long-term investors. If you're someone who's not looking to day trade, swing trade, buy and sell very quickly, M1 Finance is going to be a great spot for you to get started. So M1 Finance is kind of a hybrid between what is called a robo-advisor and a brokerage. And basically what this means is they give you some of the features that you would normally have to go through a traditional financial advisor to get a hold of. You're able to get them through this app. That means a lot more streamlined, automated processes for you to follow, rather than kind of having to do everything on your own, figuring it all out by yourself. Now, on the app, you're going to have access to both ETFs, or exchange traded funds, as well as individual stocks. Now, important note here is that you can't just buy individual stocks and ETFs on the platform. Instead, what you do is you create what's called an investment pie, where you allocate a certain percentage of your portfolio to a bunch of different things, and then kind of when you put money in, it gets automatically dispersed. So, for example, say you wanted to create an investment pie that invested in both Google stock and Tesla stock. You wanted it to be 50% Google, 50% Tesla. That is perfectly fine. Every time you put money into your portfolio, say you put $100 in, it's going to go $50 to Tesla, $50 to Google. And then as time goes on, maybe Tesla goes up more than Google, it's going to kind of readjust for you and make sure you're staying as close to that 50-50 split as possible. Also, if you don't want to create your own pies, they have over 30 expert pies for you to choose from that are kind of pre-built for you. You can just kind of say, I want that, and they'll take care of the rest for you. As you can see, this makes M1 Finance a very automated platform, which is why it's nice for a lot of longer-term investors that just want to kind of set it and forget it. And personally, I've got automatic deposits set up to go into my M1 Finance account every 2 weeks. It's a very streamlined, passive way for me to invest. I've got my pie set up, and I don't have to worry about it. I just know every 2 weeks, $100 is going in there, and once in a while, I'll check in on it and say, oh wow, I guess I have some money over there. So really nice for long-term investors. Coming in at spot number 2, we have Webull. This is the best trading app for short-term or active traders. It's basically a more technical version of Robinhood, where you can buy stocks, ETFs, options, and cryptocurrency. So kind of a lot of different assets you can get exposure to within your Webull account. Like I mentioned, a lot more of a technical interface here, a lot more research, data, tools, etc. than you would find with your traditional Robinhood account, your M1 Finance account. This is going to be a technical platform. Additionally, on Webull, you have access to something called paper trading, which allows you to basically simulate your trades. They give you $1 million of fake cash that you can use to practice your trading strategies, get familiarized with the platform, and all of that good stuff. And then lastly, they also offer free extended hours trading, which means you can buy and sell stocks on Webull all the way from 4 a.m. Eastern Standard Time to 8 p.m. Eastern Standard Time, which is quite a larger window than you get with just your traditional stock brokerage. So that is a very nice advantage, but just keep in mind, whenever you're trading outside of your typical market hours, the markets tend to be a little bit more volatile because there's not quite as many buyers and sellers. So keep that in mind if you do take advantage of extended hours trading. Now, third in the place, we have the OG Robinhood. From 2013, this app app has been absolutely dominating the industry when it comes to free trading apps. They were the first ones to hit the scene with their no commission trading. Since then, it has kind of become the norm. It's referred to as kind of the Robinhood effect. All of these brokers doing away with their commissions. So you can thank Robinhood for that one. Now on the platform, you can trade stocks, ETFs, options, and cryptocurrencies, all without paying any commissions whatsoever, and all on a very sleek and simple interface that is really, really good for beginners. One of the reasons Robinhood has grown in popularity so quickly is because of that interface. So the app is really simple to use, it's very intuitive, so even if you've never traded stocks before, you can kind of get up and running on Robinhood fairly simply. Additionally, they allow you to buy fractional shares, which basically means that if you wanted to invest, say, in Amazon, a share of Amazon currently trades for about $3,000, which is a bit of a steep threshold for a lot of beginner investors. But on Robinhood, you can buy a fraction of a share. So you could buy $5 worth of Amazon stock instead of having to pony up $3,000 just to buy a single share. So that's another reason why it's so popular with beginners, is because of that fractional share element. And then with that kind of comes the dividend reinvestment program, or DRIP, which allows you to reinvest your dividends that you receive from stocks back into more shares of stock and take advantage of something called compound interest, which again is something that beginners really do tend to value. Coming in at spot number 4 on the list is Moomoo. And Moomoo is kind of an advanced app kind of built for active traders, very similar to Webull in a lot of ways, but it's not the most beginner friendly. But it's on the list because they have a very nice sign-up bonus, like I mentioned earlier. 4 free stocks worth up to over $3,000 that you could receive just for signing up for an account and funding it. So if you're in it for the free stocks, Moomoo might be an attractive one to check out. Again, link down below for all of those offers. App number 5, this one is growing very quickly right now, and it is called Public. This is going to be the best choice for you if you are into social investing. And what I mean by social investing is kind of like seeing what your friends are buying, following different investors, things of that nature. Because Public is actually built around 2 things. They're built around accessibility and they're built around social investing. Now on the accessibility side of things, again, very simple platform like Robinhood, very streamlined. Also with the fractional shares, it's very easy to get invested in any company you want to because you don't have to worry about that share price. Now on the social side of things, you can actually follow your favorite investors, you can see what they're buying, see what they're holding, you can share your own portfolio on the platform. There is really so much you can do on the social side of things that has really drawn a lot of newer investors there who want to learn from other people that are maybe a little bit more experienced than they are. They can share their strategies with other people, get some feedback, and see what others are holding in their portfolios as well. Now, one thing that really sets Public apart from a lot of the other brokers that we talk about is they recently did away with what is called PFOF, or payment for order flow. This is a very controversial practice that has gotten Robinhood and some other apps into a little bit of trouble lately. Has a little bit to do with what happened with GameStop. So when that whole fiasco went down, Public kind of came out and said, hey, we're going to do away with this whole business practice. We're not going to get paid by these market makers anymore. And so now on Public, you can actually leave an optional tip anytime you buy or sell a stock on the platform. So that's one of the revenue streams they rely on. Instead of doing the kind of controversial practice of payment for order flow, they say, hey, if you want to support what we're doing, if you think that this is a better way to do things, you can leave an optional tip anytime you trade. So definitely sets Public apart and kind of shows you where they stand in terms of whose side they're actually on. Now coming in at spot number 6 is Betterment, and Betterment is a full-on robo-advisor. Basically means they take elements of these free trading apps like Robinhood, Public, etc. They combine those with what it's like to work with a financial advisor. They put it together and you got a robo-advisor. So basically what this means is when you sign up for the app, they're going to ask you a ton of questions about your risk tolerance, your goals, your timeline, etc. They're going to build out a portfolio for you based on that information, totally personalized to you. Once that portfolio is built, you're going to have access to some advanced investing strategies like tax loss harvesting and automatic rebalancing, all done for you without you having to have any active involvement in your portfolio whatsoever, which makes this a very attractive option to a lot of beginners. Now, an important thing to keep in mind here, that on the free plan, all you're gonna be able to get access to is their checking account and their savings account. If you wanna take advantage of their investing accounts, you're going to have to sign up for their paid plan. They have 2 options for that, either their basic or their premium. On the basic, you're paying 0.25% to them every single year, and on the premium, it's 0.4%. Now, on the premium, you're also gonna have access to certified financial planners to help you with your investing, and on the basic plan, you're not going to have access to that in-person support. App number 7 is Fundrise, and this one takes a bit of a different approach because instead of investing in stocks, on Fundrise you're actually investing in real estate. So they are a crowd-funded real estate platform, which basically means they go out there and have a ton of different people signed up for accounts on their platform, and then they use that money to go out there and buy different real estate properties that the users of the platform will own a small percentage of. Now, you can start with about $500 on the platform, and with that money, you can have exposure to dozens of different properties across the United States, which is pretty cool in terms of diversification and getting your portfolio kind of spread out across not just stocks, not just ETFs, but also different asset classes like real estate. Keep in mind that on Fundrise, there is a 1% fee on your investments, and that takes care of them doing literally everything. So all you have to do is open your app, put some money in, and just let it work for you. Coming in at spot number 8 on the list is SoFi Invest. Now on SoFi, you actually get to choose whether you want to pursue an active strategy or a passive strategy. So on the active side of things, SoFi is very similar to apps like Public and Robinhood, and they're able to buy and sell different stocks and ETFs all commission free on their platform. They also do offer cryptocurrency as well. Now, the automated side of things is very similar to something like Betterment, where you just go in there, answer some questions about your financial situation, and then they build out a portfolio for you, you put some money in it, and it just kind of works for you on autopilot. Now, different from Betterment, there is no fee for this. So SoFi Automated Investing is absolutely free for you to use, which is very nice. They used to have a small fee that they charge, similar to the fee on Betterment, but they did away with that, so now it is completely free to use. In addition to both of those things, they also create their own ETFs, which you can invest in through their platform. Now, these ETFs are a bit more specialized than your typical ETF, so they got one for the gig economy. They've got one called TGIF, where they pay dividends every Friday, and they've got some really cool ETFs. But just keep in mind that because these ETFs are a bit more specialized, you are going to be paying a bit of a higher fee for them than you would for just a standard S&P 500 ETF. But if it fits the investing strategy you're following, might be worth it anyway. Now, last on the list, we have one of the original investing apps out there called Acorns. This app is built for people who do not want to think about investing whatsoever. That's because it's built on the idea of roundups. Basically, you get the Acorns app, you connect it to your debit or credit card, and then anytime you swipe that card, it's going to round up your purchases to the nearest dollar and invest the rest into the stock market. So for example, let's say you go to the store, you buy yourself a coffee for $2.50. It's going to round that purchase up to $3 and invest the additional 50 cents into your Acorns portfolio. Now within the app, you've got 5 different portfolios to choose from based on how aggressive you want to be with your investing, and there's going to be a $1 to $5 fee every single month for you if you do want to use Acorns. So app is not totally free. With the free version, all you're getting is the checking account, but if you want to invest, you do have to pay $1 to $5 per month. Now, the more you pay, the more access you get. So on the $3 a month plan, you have access to retirement accounts, and then on the $5 a month plan, you have access to custodial accounts if you have children that you want to invest on their behalf. So now that you know about the 9 best free investing apps, which one is actually the best? Well, on the long-term side of things, like we said, M1 Finance is going to be likely your pick on the long-term side of things. On the shorter term active trading side of things, we're likely looking at Webull. They've got a lot of active trading features, or if you want something even above and beyond that, Moomoo might be a good choice for you as well. And then lastly, on the interface side, if you're looking for a very simple interface, you're likely looking at either Robinhood or Public. Now, if you're interested in getting started investing on any of these platforms, we've got links to all of them down in the description below that you can use if you want to support the channel and help us make more videos like this one. Additionally, if you want to dive deeper into any of the apps we mentioned, just head over to our YouTube channel and you can find videos diving even deeper into all of these different apps. We've got dozens of different videos over there for you to peruse, so check those out and we'll see you over there.